Well, I would like to share with you my vision of Asia in the next few years. I think the best area that offers opportunity will be in the Chinese region. Chinese region means China, of course, Hong Kong, Taiwan, and Singapore. If you look at the property industry, actually in the past few years, we do witness very significant growth in this region. We see the property prices in Hong Kong rebound from the low ebb during the SARS period. Now it's almost more than double of what we had during the SARS period. This is a substantial rebound within a 5-year period. And then if you look at China, I think from between 2003 and now, you see at least 300 times the property prices in major cities. And even in the second-tier cities, it's more than double. In the third-tier cities, it's close to double. So this is where the opportunity is. If you look back to Hong Kong, we also offer a variety of opportunities for our investors. That is why ever since the SARS period, we see a lot of finance institutions, finance companies, banks, professional firms, they are all coming back to Hong Kong. And then other than Hong Kong, then let's also look at Singapore. They offer a very good business environment. And of course, the government pays a lot of attention to their market situation to make sure the property prices won't go out of range. So that's why they have been trying to offer a lot of new supply to the market, residential, office, or otherwise, just to make sure that Singapore offers a more reasonable price of environment in doing business. And of course, last but not the least, we have to mention about Taiwan. And actually, I don't really know too much about Taiwan, but I've been talking with delegates from Taiwan during this MIPIM conference. From the information they gave me, the Taiwanese government under President Ma Ying-jeou is really working hard to promote Taiwan as one of the business hub, especially with the cross-border trade with China. So this could be, and this should be a very good opportunity for us to invest into the property market in Taiwan. What I appreciate most is the government, they are really working very hard to provide a good business environment.
I'm a consultant, and what I'm concerned about is where we go next with this wonderful opportunity that we've got. Because to date, we've been dealing with a developing nation, developing countries, and now we're dealing with developed countries. And regulation is going to become stricter, we hope. Quality of construction will improve, quality of control and planning will improve, and there will be a greater degree of concern about sustainability and issues of energy consciousness. So with the boom comes also the opportunity to be a lot more holistic and a lot more careful in our thinking. We have here the opportunity to build. The Western world, of course, has the advantage of more developed concerns about sustainability and planning that we need to bring in so that we build well for the next few years. And I think this is the strongest message that I want to give is, let's build well for the next 10 years. We are going to have a wonderful time, which is the time that we are going to form our cities for the future. All the governments of the Asia-Pacific region were extremely acute in dealing with the downturn, in investing in infrastructure, which was absolutely wonderful because it kept the likes of Aedas and other consultancy companies running. More importantly, it created the infrastructure that we are going to need in the next 10 years as we build our cities. As we move forward, infrastructure, the development of the railways in China, the development of railways in Singapore and Hong Kong, and in Vietnam is going to be incredibly important. And there's another message I want to give, railway. Railway above road is the way to go for the future, for sustainability and energy consciousness.
If you look at the region, normally people divide it up into North Asia, which is Japan, Korea, China, Hong Kong, Taiwan, India, market of it on its own, Southeast Asia, including Singapore. Depending on what type of money you are, then you decide where to go. the markets where there's a lot of opportunities are, of course, India and China, very opportunistic. I go for China because China has experienced many cycles of booms and busts. China has seen it all. We have, in the last maybe 15 years, gone through at least 3 times of austerity measures. China has managed so far to soft land every time. And the reason is because, don't forget, China is still not a full market economy. It is still very much, the government has a lot of influence in the market mechanism. You go to India. India is very opportunistic. Unfortunately, today, India is not as disciplined. And the codes for doing business are not as transparent. Today, it's very difficult for people to buy whole transactions of whole buildings. Many of the time, people have to participate in development of the project. But you know the development risk in India is horrendous. So it is very difficult for foreign investors to go into India in any large scale unless you are prepared to make a huge commitment. If I look at the whole of the Asia region for next year, I think China still is a no-brainer because you get to gain in the currency. I think Japan and Korea is probably worth looking at if you know how to play the financial game and if you have a good local partner. But the rest of the Asian market, I would tread very carefully next year because the liquidity that's going to be pumped into the system, the QE2 that's going to go into Asia, is going to cause some asset inflation. And we are seeing that already in Hong Kong. I mean, I have a friend here, Peggy, she was trying to chase one of my buildings. And at the end of the day, after revising the price 3 times, she still couldn't get it because of the asset inflation. People are just saying, I want brick and mortar. I don't want to hold on to the US currency, which is going to depreciate over time. So I think China is still a good bet. Transparent markets is a good bet. I think if you believe in the long-term market of these economies, you wouldn't. I mean, there are ups and downs, but you wouldn't lose too much because you are changing from a deflating currency, the US dollar, which is pegged to the Hong Kong dollar, into brick and mortar.